SneakPrice Weekly Market Report, Episode-006. The sneaker market is changing fast, and here's the actual data. 2 years ago, nobody was making content about Mizuno. Today, it's StockX's fastest growing brand. Meanwhile, Nike just needed a tariff refund to keep its earnings from looking worse. This market is moving fast, just not where most headlines are looking. Let's get into it. Quick disclaimer. This is market data and informed opinion, not financial advice. Every figure is a snapshot, not a live price. 3 real shifts. Let's go. Only 47% of new releases resold above retail in 2024. Back in 2020, it was 58%. But that decline is not the whole story. StockX's own 2025 data shows legacy brands still sell the most by volume, while the actual growth is coming from names nobody predicted. Not a collapse, a rotation. Shift 1, the performance running takeover. Mizuno, StockX's fastest growing sneaker brand of 2025, up 124%. Mihara Yasuhiro right behind at 91, Saucony at 59, Salomon at 58, and ASICS, the #1 fastest growing brand back in 2024, is now a top 5 bestseller for the 3rd straight year alongside Nike itself. 5 brands, 1 pattern. Performance running crossing into everyday rotation is the biggest growth story in this market. Shift 2, 2 companies, 1 quarter. Opposite outcomes. Nike's most recent quarter. Revenue down, China down 12%, stock down about 32% so far this year, and earnings beat only happened because of a nearly $1 billion tariff refund. ASICS' most recent quarter, revenue up nearly 30%, profit up 47%, every region and category growing, all-time records, same industry, same 3 months. Shift 3, scarcity is getting engineered. The Kobe 3 warning label sold at exactly 1 store for 1 weekend. It now trades from about $1,000 to over $5,000 depending on size. No celebrity moment required. Adidas surprise dropped Bad Bunny's debut signature shoe the day after his 3 Grammy wins, limited to exactly 1,994 pairs. Brands aren't just releasing hype anymore, they're timing scarcity on purpose. Put it together. Growth is in running crossover brands. Big 5 status no longer means uniform performance, and scarcity is increasingly manufactured, not accidental. Well, we know ASICS is guided for another 20% profit growth. Nike's own CFO expects flattish earnings through the first half of next fiscal year. Well, we think that gap likely persists, and more brands copy the engineered scarcity playbook now that it's proven. Not a guarantee. 3 things to remember. Running crossover brands are the actual growth story. Nike and ASICS prove the big 5 aren't moving together anymore. And scarcity today is often engineered on purpose, not financial advice, just what the sources show. Subscribe for next week's report and track it live at SneakPriceApp.com. See you next week.